Welcome everyone. I'm sure this is going to be even more exciting session to what you've already had today. And before I introduce our panelists, let me just introduce myself briefly. I'm going to be your moderator for this evening for the panel session. I'm Guneet Rana and I work at CBA in the wealth management arm, which is called Colonial First State. I'm responsible for an alternatives portfolio. It is a 1.1 billion fund and is basically a fund of hedge funds. And now over to the panelists. Let me start with Savneet Singh, who's on the video here. Savneet is an investment banker turned entrepreneur and has been at the forefront of changes in the world of banking and finance. Featured in the Forbes Top 30 Under 30 and Crane's Top 40 Under 40. He has had a successful career on Wall Street as an investment banker at Morgan Stanley in New York and has worked at the hedge fund Chilton. Savneet left the world of high finance to pursue a market opportunity in gold trade, founding Gold Bullion International, a platform for trading physical gold. Now, having exited GBI, Savneet is a keen investor and advisor to fintech startups. Welcome, Savneet. Moving on to my next panelist is Mohammed Khalil, on the extreme right. Mohammed is a financial services innovation and digital product strategy expert. He is currently General Manager of Digital Banking at CBA and is building CBA's innovation capacity and leadership program. He was the head of product, data and partnership at Movin. And also prior to that, his experience includes Bundle, which was a joint venture of Citigroup, Microsoft and Morningstar that won a 2010 FinWeight Best in Show. Also, he is the co-founding team member of Novantas, a financial services management consultancy, and an alumni of First Manhattan Consulting Group. Welcome, Mohammed. And lastly, we have Nikesh Lalchandani, who is an innovation executive at CBA, and I'm sure all of you had heard him talk at one of the garages in the end. Nikesh worked for a number of startups, some of which now have become or have been acquired by multinational corporations. Others were failures, but all of them were learning experiences. He was head of payments platform architecture at CBA, and at the time saw the implementation of a number of innovations: tap and go, mobile banking, real-time banking, and many more. Today, he focuses his efforts on technology at CBA that includes cyber, blockchain, next-gen compute, AI, and a host of other innovations. So welcome everyone to this session. Now the way I was planning to run it is, because Savneet is on the video, if you can really hang on to those really interesting questions right till the end, and let me ask some questions to the panelists first. Now, what I would really like each one of you to do, and I'm sure our audience would love to hear, is about your career journey, about your journey in the banking or financial services industry, from where you started and where you are today. Now, Savneet, how about I start with you, and then go to Mohammed and Nikesh then?
Sure. Can you guys hear me?
Yeah. Very well.
Yeah.
So I began my career very much as a traditional finance background. I started out in doing a couple of years of investment banking in mergers and acquisitions, and then I transitioned to an investor primarily on the technology side. That was a result of having a very entrepreneurial childhood, starting lots of little businesses along the way. And then I started a company called GBI, which was a platform for investors to buy and store precious metals online. And so the idea, I was very excited by this idea of creating an exchange or a global market. I didn't really have any interest in gold or commodities. In fact, I was probably averse to them, coming from more of a Warren Buffett investing background. But I was just fascinated by this idea of creating a market and exchange. And so I left my job, jumped jumped into it. And today I spend a lot more of my time investing and helping other people do the same thing I did 5 or 6 years ago.
Thank you. Mohammed.
Sure. So my story is in undergrad, I thought I was going to end up becoming a professor of history. And one of the things I looked at was what are the things that drive economic development in a country? And it came down to just a handful of things. It was basically access to medicine, access to education, and access to financial services, and then finally a voice in government. So I said, well, what can I do to sort of help drive development in countries around the world? Well, I'm suck at medicine. I'm probably a bad educator, and I'm really not interested in politics, but let me understand more about finance. So I started my career in consulting to really understand how banks work and what their role is in helping consumers and corporates drive economic development in a country. Then went to work for those banks to actually see if I could execute innovation, realized it was very difficult to do so, and then saw an opportunity with startups emerging in the early and mid-2000s to really drive innovation. So went to a couple of startups, had some really great experiences there, building them, looking at answering real customer problems. And then CBA came along and offered me an opportunity to take those same innovation experiences and apply them here. And CBA is honestly one of the most advanced organizations globally in terms of having the right capabilities to drive those kinds of innovations. So it was a tremendous opportunity for me to be able to do the types of things that I would like to do at scale, particularly in helping individuals and small businesses succeed and do better and to fulfill that vision of financial well-being.
Nikesh.
Hi everyone, Nikesh Lavsanani. I think I've met most of you in the garages, so look, very similar story to Mohammed in terms of journey. I think he's been much more successful in Silicon Valley than I have, but so a little bit of a personal story. My background is Sindhi, and for those of you who know, we're a neighbouring state to Punjab. It's now in Pakistan, and you know, my grandparents moved to India during partition. The interesting thing about Sindhis is they follow the Guru Granth Sahib, so they're actually Hindus that follow the Sikh religion. The eldest son is traditionally given into Sikhism. So I'm actually the eldest son. I should be a Sikh, but I'm not, and I apologize for that. Yeah, I go to Gurdwara regularly, but I didn't take my parents didn't give me the turban. So anyway, so I was born in Australia. I'm not going to tell my full life story. So I was born in Australia just after the end of the White Australia policy. On the where I was born is actually the Boulevard in Strathfield, and if anyone knows Strathfield, it's full of Indians today. My mother tells me that if she saw an Indian at the time when I was born, then that would make her day, because there were none in Sydney. And I grew up largely in a white community, and I think I studied engineering. And I had this dream that I wanted to go back to my roots in India, and I had this great innovation idea, and it was to develop a hydroelectricity plant in India. So I went to India, and no one took me seriously. I did get a job. I got a job in a sugar mill connecting a Novell LAN network, and eventually that idea that I had about that hydroelectricity plant was stolen by Shah Rukh Khan, who made it into a movie. I don't know if you've seen Swadesh, but he did exactly the same thing that I was thinking of doing. So he was more successful than I was. But so I started out with in IT, you know, based on that experience. Came back to Australia, worked on a few startups over here. Had you know, over the years, I think as you heard. You know, one of them was Avanade. I was employee number 3. Pete was employee number 4, I think. And that's now a multinational company of tens of thousands of people. So some of them have done quite well. I joined CBA about 9 years ago, was part of some phenomenal innovations, so real-time banking, a lot of the mobile revolution that you know about, the whole internet revolution, has all happened in a very short space of time. So that's really been my career journey.
Thanks, Nikesh. Now, when I think about technology, I would say, is it more an enabler or is it more a disruptor? And I must say, working on personal experience in the hedge fund industry, I think technology has actually enabled a fair bit of disruption and has changed and is changing the landscape a fair bit. So what I'd like to throw out again is to really get your view on how technology, in your view, has, I would say, enabled or disrupted our industry, and any comments on your journey and looking ahead. Savneet.
So you cut out there, but if I could summarize, so you were asking sort of comments on technology within financial services and within my journey, is that right?
Yeah, I was thinking of technology, if you think about it, it could be viewed as an enabler, or it could be viewed as a disruptor, or you could think of them as both. And in your journey, how has it really influenced?
So, I think it's very hard to paint a broad brush on as technology enabler or disruptor. I think it's incredibly industry dependent, even within financial services. There are certainly industries where it's completely disruptive, and there's certain ones where it's enabler. I think, in general within fintech or financial services, I find it, early on to be more of an enabler. Very rarely in financial services do you have complete disruption, and there's large reasons for that. These companies, whether it's regulatory, whether it's capital related, that make it hard to have massive, quick disruption. And so I think you oftentimes start with some sort of enabling technology, and then it can quickly lead to disruption. In my career, I'd say technology was sort of the key for everything. So
I think it just lost the video.
Sorry. Oh, there he is.
Yes.
Savneet, can you just pause for a
really
second?
outside the realm of technology, and we used to oftentimes joke, nobody from MIT ever went to the commodities or precious metals industry. And so our technology enabled us to sort of enter this industry without any real backing. As I mentioned, I had no background in this field, literally none, nor did anyone on our team. And so I think for us, technology enabled us to kind of enter the industry. And then I think over a period of time, we certainly disrupted it and changed the way people operated. But it took time because it was not like an Uber type effect. You sort of had to make inroads and grow from there. So, I guess for me, it was technology was everything. It was literally the sole reason we existed. No one else had sort of spent the time and the money to build the technology. And then eventually that did lead to disruption.
Okay. Mohammed, of course, you've been working in the Silicon Valley or in New York. What do you think? What has your experience been on when you think of, maybe a better way of saying it, what are the origins of fintech, and how influenced has that been in your whole journey?
Sure. So I agree with Savneet that it all depends on what industry you're in. It also depends on whether you embrace the technological change and keep up with it. Otherwise, you will be fully disrupted. And over the past decade, the cost of disruption has dropped dramatically, right? So with the advent of cloud services and a variety of other things that allow someone today to literally start a startup with one person and a couple $1,000s, that honestly years ago would have taken millions. So when I was at my first startup, we had on the order of about $25 million to build the experience we had to build. At my second startup, which was only 4 years later, we needed 3. And it was because within that span of time, the cost of actually being able to build all those services and the gig economy had come into play, and you could get a UX person for a few hours, it'd be very cheap, all started to factor in. So the pace of change, the pace of disruption will continue to increase as other services reduce in cost, as people build platforms that will connect organizations to the types of capabilities that they need to deliver those. The challenge becomes for an organization like CBA or any other major bank, how do you both keep up with that disruption and also create a natural way to not necessarily defend yourself, but to at least make it easier for you to be able to continue focusing on your core business. And I think it comes down to three things. It's about taking advantage of your scale via network effects, which if you look at Google and Facebook and Apple and others, they're very good at understanding the power of network effects, that it's not just the number of people, it's the square of that, right? Because you have this ability to extract value from that. It's also about the ability to leverage the fact that large organizations are able to look at multiple aspects of your experience. So startups have to be very focused. You can't go in and reimagine all of banking, right? You're usually focused on, we're going to focus on transactional accounts or savings or investing, and a very specific aspect of investing. Whereas large organizations have the ability to take those great ideas and either build them themselves or partner with those organizations and bring that service across the entire range of things that they're offering to their customers. So how do you do better? Well, you become a better partner, or you become better at innovating internally. And I think we have to be thinking about that constantly. Otherwise, eventually we will be disrupted, because even if you can keep up with the pace of change in terms of technology, it will become so cheap that others will be able to keep up better than you.
So if I have to give a crystal ball in your hands and say, how do you think technology is going to change our banking and financial services industry, say, in 5 years' time? Can you just visualize what it's going to look and feel like?
I think even 5 years out is really hard to predict. I think there are really strong trends in the use of natural language processing and AI to start creating sort of chat-like experiences. I think there are opportunities for blockchain to really disrupt the way banking is done. So even 5 years out, I think it's going to be very hard. I think to operate in any business where technology or digital is playing right now, you probably have a view out that's maybe 36 months. Because when you look at exponential growth curves, which is how technology is being adopted today, when in the beginning, it's a very gradual process, and it's a very difficult one to discern that in just 12 to 24 months, that process will accelerate extremely rapidly. And so when you look at Facebook and its investment in mobile, they did not predict the rate of growth in mobile interactions for Facebook quickly enough, but once they saw that this was not gradual, this was exponential, they immediately stepped into that and doubled down. And any large organization today needs to have that flexibility to know that if they see chat or blockchain or robotics begin to take off from that initial part of the gradual part of the exponential growth curve, if they don't move fast, they're done.
Nikesh, moving to you. Of course, you're working in the garage. What do you think is the biggest barrier to any of this technological progress that Mohammed just mentioned?
Yeah, look, I think the biggest barrier today is our ability to share information with each other. We've got no idea. I think I agree with everything that the panelists just said. So it's changing at an enormous rate. We don't know where this is going. We don't know how we can make money out of it. And I think the biggest barrier to change is our inability to share innovation with each other. So I think co-innovation, co-creation is something that's really got to take off. If we want to see the next generation of change happen, we've got to accept the fact that, look, by ourselves, we're not going to be able to make the change that we need. We've got to work with each other to make that happen.
Okay, thanks. So Nate, now, being an investor and an advisor for startups, what advice would you give to a lot of the young audience here who could be thinking, what you were thinking a few years ago?
So I always start that question by, first really challenging why someone wants to make that decision. And most of the time, it's the wrong answer. So if I was meeting any new person, I'd probably tell most of you not to do it. Starting a company is like a massive endeavor that is rarely successful and I think not relevant for most people. So I would first say, make sure you're doing it for the right reasons. And I think those right reasons are you're really obsessed about fixing a certain problem or creating a solution or inventing something. I think if you don't have that obsession, it really doesn't work because you will face lots and lots of hurdles, and if you're not obsessed with the actual problem or the challenge, you'll fail. The second thing I would say, and this is actually very relevant to fintech, is I often find, particularly as an investor, that people jump into a startup and work incredibly hard, sacrifice their life for 2, 3, 4 years, only to find out, after 2, 3, 4 years, that the idea they picked was probably the wrong idea. That they are whatever X $1 million in revenue and they're kind of capped where they were, it probably wasn't worth the time for them to leave the position that they had or leave the career that they had. And so the second piece of advice I give, and this is really for fintech, is do that diligence up front. Make sure you're entering the right market, the right product, and you're not just jumping into something that's sort of a small niche. And the last thing I would say, and I think this is probably most important if you're committed to doing it, is very quickly surround yourself with co-founder, partners, advisors to help you sort of stand on the shoulders of their experience. Getting into these startups is you can save yourself a lot of time, a lot of heartache by finding people who've been through it or people to help you get through that journey. So I would do that. I would prioritize that probably more than anything else.
So looking ahead, but you still think that startups, fintechs, startups play a very important role in our industry, or should they just change this industry or try it out somewhere else?
So do I think the startups will...
No, it's when anyone thinks of technology, and of course we're talking fintech here in our financial services industry, if they're so obsessed with technology, is our industry the right industry? Is fintech the right industry? Or should they just move somewhere else where it's much easier?
Yeah, so I think you have to be obsessed with the problem within financial technology. I think, listen, if you're great at AI, you have to find the best commercial application for that. But what I mean by best is what excites you the most. So I think it's very much dependent on the person. I think financial services is a gigantic industry. There's tons and tons of opportunity. And it's goal seeking to what gets you most excited, and at the same time making sure it's a good business. And as I've argued elsewhere, financial technology and services, while great and huge, is also, I think, one of the harder industries to innovate in. So I wouldn't do it because it's easy. I would do it because you think it's, or I wouldn't do it because it's easier. It's the right one. I would do it because you think that you're obsessed with that certain industry or that vertical that you could apply your technology or your passion behind.
I might just add something to that. I think what Savneet said there was really, really important, and what we're seeing is a really big shift. I think look, I get the opportunity, Mo gets the opportunity of meeting a lot of startups, and a lot of startups that come in to this organization, that we see anyway, at least in my experience, they're after the big capital event, the thing that's going to make them a lot of money. Right, and I wrote about this. I had one startup come here and say, "Oh, look, I've got this great idea. I haven't started implementing yet, but I'm trying to work out what my exit strategy is." Right, so they're worried about how they're going to make money before they've got the passion for the idea. And what Savneet said is 100% true. It's all about the passion. And what I tell people is if you really look at it, and I like this number, $32,400 US per year. Is the income that puts you in the top 1% of the world, right? So if you're earning more than that, you've made it. Yes, it's hard in Sydney, I know, because of real estate prices, but at some point you've got to realize that, look, do I really need to keep on making this money? And it comes back to that co-innovation thing that I'm talking about, which is the big problem that we've got. We all want to hold on to our ideas. We all want our own startup. We don't want to work for someone else. and we want to make a lot of money for ourselves. But really, I think when we can get to a world where it's more about sharing, it's more about sharing ideas, it's more about innovating, so it's something that you're passionate about, like we talked about empathy there, that you feel passionate about, that you believe in, then I think we're going to be in a much better place. That's what I think anyway.
So Nikesh, are you telling everyone to join CBA? Well,
Come and join CBA.
Okay, just to finish off on that point, when you say how do you monetize yourself, a question for everyone actually in the panel is, how do you really define success? You know, if you've had that passion, you've had that desire to create, how do you in the end say that I've been successful? Samit, you want to start with that? We can have, of course, a really good go at it.
I think success is a relative question for everybody. I think it was Maya Angelou who said, I think success is defined by being able to enjoy yourself, enjoy what you do, and enjoy how you do it. And I think I very much abide by that. I also think, success is sort of like something that grows over time. I think what I thought success was 5 years ago is different what I think it is now. I'm pretty sure it'll probably change as I grow. And so, so I think, it's maybe a bit more like an existential than anything else.
Mohammed, do you want to give it a go?
Sure. I mean, to me, success is living a life of purpose. And to live a life of purpose, I start with what am I curious about? Because if I'm curious about something, then it's something that's going to keep my interest, right? And if I can write out a list of all the things that I'm curious about, and then all the things I'm passionate about, right? What are the things I'd like to see change in the world or in the community around me? And to look for the overlaps, right? Where are the things that I'm curious about that I'm building up knowledge or expertise or capability? How can I pull those things together to solve some of these problems that I'm passionate about? And out of that, you can find your purpose. Because if you start the other way, by trying to figure out what's my purpose here, you get lost. But if you start with what am I naturally attracted to and what am I naturally passionate about, and how do I bring those two things together? If you find yourself in a role or doing something that is in alignment with that purpose, that keeps you curious and interested in the world, and keeps you passionate and engaged in the problem you're trying to solve, then it doesn't matter whether you work at a startup and it doesn't do well, but you've picked up a lot of experiences that you can take on to the next one, or whether you exit with a $1 billion valuation. That's success to me.
Thanks. Nikesh, after some of those learning experiences that you mentioned, how do you define success?
Yeah, look. I just have to say what you said there, Mo, was wonderful, and I think we're learning this. That what we've done is we've put people say that we've put happiness at the end of success, putting happiness before success. So putting your purpose before success is really the key, and I have to agree with that 100%. Because when you do that, right, then everything that you do becomes a game. It becomes fun. It becomes enjoyment. Your whole body, your whole soul is absorbed in what you're trying to do. It becomes your lifeblood. And you don't do it to make a lot of money. You don't do it because you want to be famous. You don't do it because you want to be rich. You do it because you believe in it. You're happy. It's your purpose. And I think that's wonderful. And I absolutely agree with that. Yeah.
Okay. I think that's a lot of questions from my side, and I'd like to open it to the audience. There will be a floating mic in Gurvansh's hand. So if anyone likes to ask a question, please raise your hand and he's going to take the mic.
Hi, I'm Mandeep. Just got a question for both Mo and Nikesh. Why aren't we hearing much of CBA partnering with fintech startups? And talking from my own personal experience, it's so hard to talk to CBA when it comes to fintech startups. I mean, your competitor Westpac is pumping money into startups, but is it because you don't see any quality startups, or you're still analyzing how to engage startups here in Australia, the fintech startups?
Part of it is, as one of the largest banks in Australia, we're approached by startups all the time. So just engaging in all the conversations is quite time consuming. The second is, as you pointed out, we have not gone out with a strategy of let's go invest in various startups. And the reason is that we think it's about building a capability of being a good partner to a startup. So we are in conversations with many startups. We are working through those. There have been already a few announcements of a couple of startups that we've already collaborated with. Caligo is one, Ondec was another, and there will be more. But we have to stay focused because what we're trying to do is we're actually trying to make sure that we do right by those startups, and it'll be a smaller amount to begin with. And as we learn and build that capability very rapidly, we will expect to see more and more engagement with startups across Australia. So it's definitely on our radar. I think when you're looking at it from the outside in, with many startups trying to talk to us, at the end of the day, it's only going to be a handful that we'll really be able to engage deeply with to make that partnership very valuable. And so it would appear that there isn't a lot of movement, but there actually is. And we're looking at ways that how do we scale that so that instead of a handful of startups, it might be a dozen or a couple of dozen that we're able to engage with. But at the end of the day, it's always going to be a selection. It will never be the entire population.
Hi, Karan. Just two questions for the panel. You talked a lot about banking. I just wanted to get the opinion on insurance within financial services with CommInsure and some of the other insurance spectrum products that are out there. How innovative is that industry, and from a fintech perspective, what's happening in that space? And the second question was around Australia versus the US in terms of the landscape, the differences you found.
Sure, I could probably start on that. I've actually been an active investor in insurance the last 2 years. We've probably done five insurance investments in different startups. I think insurance is an interesting place to be within fintech. I think my personal view is insurance will sort of follow a bit of the path of lending, in that the first set of lending businesses that were successful were very much, taking a traditional product and selling it online. So if you look at Lending Club, Prosper, some of the analogs you have of those guys here, or even Ondec, it was saying, I'm going to sell you a consumer loan, but I'm going to sell you online, and maybe the funding source is a bit different, but you're selling the same exact product a bank was selling you, you're doing it online, or you're selling it on a phone. And so insurance, the analog is, now you can get life insurance on your phone or renter's insurance, and so it's still selling you the same product, but it's doing it online or through your phone. And I think just like in lending, you're now starting to see companies create new products, and that's where I think where it gets very, very exciting. The difference is, within lending, you're seeing that happen very quickly. I think it's going to take a long time in insurance because of the regulatory barriers behind most insurance products, and the difficulty going from country to country or state to state, where every single state or country has its own laws, its own regulations, where it's faster to do that in lending than it is in insurance. So I'm very excited about insurance. I think I do fear that there's also way too much excitement around insurance, and so I've slowed down there because people sort of, I think, very simplistically say, oh, I should get life insurance on my phone. Of course, that's going to be $1 billion company. And in reality, that's not really a competitive advantage. That's not really a moat. Being able to put a product on a mobile app is sort of a linear progression of the product. So I think I'm excited. I think there's a lot of hubris around it, but it's exciting. And actually, one last comment I'll say is, if you try to create a definition of a successful business, I would argue that the best sort of answer to that question is longevity. If your company survives, you're very, very successful. And so when people come in and say, I'm excited about investing in insurance because the industry hasn't changed in 100 years, I oftentimes say, well, that's probably because it's really good business. Otherwise, it would have been disrupted 50, 60, 75 years ago. So I think you can be excited, but be careful. I'll go quickly on your second question. I think the most significant difference I see, and I'm not an active investor in Australia, is just the size of the market. I run a lending fund where we sort of look at different opportunities to advance credit to lending platforms, and the the size of the market in the United States is so large so that you can, and so I think being in Australia is actually probably a bit harder because you really need to hit a really big idea to make sort of the capital returns than you do in the US. And I'm sure the rest of the panel has a lot more information on the specifics of the different industries.
Yeah, look, I think that was a really good insight. Something I was impressed with that view. I think from our point of view, I just have to agree with that. I think the challenge that we're going to see specifically in Australia, and I don't want to say anything that will get me into trouble, so I won't. But you know, CommonSure has been in the media. I think what we're going to see now is a simplification of products. That's my guess, so that it's in plain English, it's easy to understand. You know when you're going to get your premium paid out. So the simplification of products is going to be a big change that we're going to see. We're doing a number of interesting experiments in insurance, and a number of industries are. So if you've heard of IoT, so Internet of Things. So that concept is that imagine if everything was connected to the internet, like your car, you know, your bicycle, your television, everything was connected to the internet. You know, could you do things differently? And so insurance companies are looking at, you know, potentially insuring you based on how well you drive. So if you're always under the speed limit, if you're always obeying traffic regulations, if you're a safe driver, then your premium goes down. And they monitor that through Internet of Things. So those sorts of innovations, you know, are around. The other thing that we're looking at, which is in the media, is trade finance. So when you're sending a shipment of goods across the world, being able to track that shipment and insure it and maintain a view of the risk is something that's really big for financial institutions. Something that we're looking at potentially doing down the track. The other interesting one is, you know, the complexity of the products means that you sometimes need an artificial intelligence agent to try and explain it. So we've done a few experiments around trying to get artificial intelligence agents reading the PDSs that we tell people to read and explaining it in simple terms to people. So we're doing quite a lot in insurance. I think we're going to see a big transformation in the next few years, but I 100% agree. It's a business that's been quite efficient. That's why they've been around for hundreds or several years. Other questions?
Any other questions?
Yes, my name is Saranpal Kale, and my question is primarily for Savneet. Thank you for joining the panel, Savneet. Yesterday was a very anxious day for a lot of us with Donald Trump coming to the presidency. I know it's early days still, but what do you see, what are you thinking the impact this will have on the VC industry or innovation in general in New York and broadly the States?
You know, still a little bit too early for jokes. But you know, it's a little scary. I mean, if I was to pick up my computer right now and look outside, you know, you still have a few thousand people protesting. We're right near Times Square. You still have a few thousand people protesting. So it's kind of amazing. You know, in reality, you know, I think it means very, very little. So here's why. Having thought about this literally for just 24 hours, I'd say, you know, it's very hard for a president of the United States to have a lot of impact just because he wants to make a decision. And so while during the campaign he sort of had this rhetoric of, I'm going to do this and that, I think even though his party controls the other houses of government, I think it's still very hard to have immediate change. And I think in particular, you know, anyone who's sort of coming from that seat can see that in the US, Silicon Valley in particular is such a driver of growth, such a driver of job creation, that any policy to restrict that, I think, is a challenge. Secondly, this is just my own personal view of the world. It's very hard to like stop macro tectonic shifts that are happening, and I think it's incredibly hard to stop this wave of change that Silicon Valley has brought about. You know, I think the real question, maybe the question that's more relevant is, how do you sort of live in a world where you have this technological world and in an American capitalistic economy that unfortunately unfortunately doesn't benefit enough people. And I think that's probably a better reason of why, probably a better answer why you want. How do you engage all these people who feel left out and aren't educated and can't participate in this new economy? And then what do you do 10 years from now? And that's everything, right? When there are no needs for taxi drivers, when there are no need for factories with 3D printing, how do you keep those people, get them educated, get them involved in the economy? And so I think in the short run, I don't think it really has any impact. I think in the long run, it probably does make the broader American system less competitive, because I think there'll be more social programs put in place. And the challenge of this generation will be, how do you provide or create a system to empower all those who feel left out?
Interesting you say that, because read, I think, a couple of days ago, before the announcement, that it's not between the left and the right wing where the debate is going. It's more between those who are opposed to globalization and technological innovation and those who are. And that's sort of what you're implying, but it's really tough to see if, and I'm hoping not, that there's any dramatic change that comes through.
I mean,
listen, I'm sure there'll be great things to trade. I think the global trade will absolutely have some impact if these policies go through, but like the core innovation, sort of like, a lot of what we've talked about here is, data creating new financial products, right? Whether it's insurance or lending, like that innovation, I think, continues. It's really, will that be captive to just the U.S. or a global world, and will we be able to create enough? Will we have enough engineers to make that happen?
Yeah, I mean, I was following the election quite closely myself because I'm a New Yorker as well, and I think in the short term, probably very little impact other than the one on talent. So the fact that a lot of the talent that comes into New York and Silicon Valley and Silicon Alley, lots of it are from abroad, and if you have this sense that this is not a welcoming nation, I'm sure it'll have some impact on people just considering their options. Because there are other technological hubs that are emerging around the world. We'll see how big an impact that
Sydney?
is. Yeah, Sydney, for example. I think in the medium term, there's a potential for some misstep from him, very likely misstep from him, either on economic policy or foreign affairs, that would just cause a global shock. And then just in that global shock scenario, VC funds and the appetite for risk dries up completely. And so that just becomes a medium-term risk that you just have to live with and figure out how do you react to that. I think longer term, a lot of or a good chunk of the innovations that are now emerging through these fintechs was driven by a lot of investment by the U.S. government. The DARPA challenge to see if, can they create a self-driving car that gets across a desert, right? Helps jumpstart things, right? The internet itself, right, was funded by the government. So if he starts to think about having his administration run the country from a business perspective and doesn't realize that there are these long-term values that come out of investing in the National Science Foundation and doing this type of research, if those funds get cut dramatically, we're actually cutting into the future opportunities that could be generated. So, could he affect all those three scenarios? Is it likely? I would agree with Savneet that it's very difficult for a president to do a lot without cooperation with other parts of the government. But there are, he's unpredictable. He hacked the election effectively. He may hack the U.S. government.
I think we have one more question, is that right?
Yeah, we've just got one more question just here. Hey guys, my name is Anjan McRoy. So this is a question probably about tech startups as a whole, not just fintech. You were asked earlier to kind of give what you thought the tech or the fintech startup scene would be like in 5 years' time, and you said 36 months is probably the furthest you can kind of look ahead. With AI and VR coming through and heaps of other things, where do you see, or what advice would you give to anyone looking to get into startups? Do you see any space for things like apps still and mobile development, web development, or do you think that anyone that's really trying to get into startups now should jump straight towards your AI, your VR, and see if there's any opportunities in that space?
So from my point of view, having looked at AI, if you can get into, if you can get your relatives, your kids, yourself into STEM, science, technology, engineering, maths, that's a fantastic step forward. That's really going to be where the future is. Being the person who can program the machine is going to be what it's about in the future. And I think today that's about building apps. I think the AI jobs are not quite there yet, but just being the person who can bridge the gap between the natural world of humans and the world of machines is a fantastic place to be, right? So whether you're designing an app, whether you're doing a web page today, I think that's a wonderful skill, and you can still make a lot of money in that. So I'd absolutely encourage you to do that. And when I tell people about AI, having done a lot of it myself, is there's no magic there that's different to normal IT or programming. All the building blocks of AI are actually founded in the stuff that you use to build your apps, to build your websites, to build your applications. They're all there.
Yeah, my only sort of advice is you have to have a growth mindset. So going back to being able to discern the gradual part versus the very sort of high growth part of that exponential curve. If you go back to the story of, you put a grain of sand on, or a grain of rice on the first chess box on a chessboard, and double that, right? And you get to a point whereby halfway through the chessboard you've got more grains of rice than. When you think about that exponential example, if each one of those is, let's say, a year in terms of the evolution of AI or VR or any one of those things, no one really knows whether we're on the 7th slot, and so we're only 3 slots away from it really taking off, or the 2nd, and you're 5 years away. And that's why seeing beyond sort of that 36-month time horizon in terms of what's really the next trend is difficult. So the only thing you can do is be agile, right? So if you see that there is a trend, and apps are having their day in the sun, and people see that there's a sort of an end in sight. Is it the next 24 months or the next 48 months? I don't know. But if you have that capability to say, I can learn quickly, I can take the same capabilities that I have in terms of how to grow a business, how to think about customer problems, and how to execute against that, and then teach myself and be able to recognize when I see that upswing happen and take the bet, and be willing to live with the fact that it might be a year, it might be 3 years. Which brings us back to that whole discussion around, you have to have happiness in what you do every day. You have to have that sense of purpose, because otherwise you will look back on it and say it was a waste of time. Because if your purpose wasn't to have that growth mindset to try to solve a problem, you'll feel disappointed. So I couldn't tell you whether you should go into VR or AI at this moment. What I can tell you is it's probably safer to start with apps, but have that ability to step into and learn other capabilities very quickly.
A quick addition. AI is, in my opinion, is yet to be like a real product creator in fintech. It's really been a product enhancer. So, adding a chatbot, creating a better underwriting algorithm. It's yet to actually create a product. So I think the AI skill is great, and it will be amazing. It will transform much of what we do. But at this phase, it's really just been a great enhancement to existing products.
Thank you. I'd like to thank the panelists. Thanks, Nate, for dialing in at this time of the night, even though New York has a favorite protesters keeping you awake. But thank you so much. And thanks, Mohammed. And thanks, Nikesh. And thanks, everyone, for participating in the session. I'll hand over now to